Hello friends, my name is Scott. Please gather round. Tonight we're diving into the thrilling world of taxes. Don't worry, it's more interesting than it sounds, especially when we're talking about the federal income tax, a real humdinger of a story that starts way back in 1861. See, America was in a bit of a pickle. The Civil War. Wars, as you know, are expensive. Somebody's got to pay for all those cannons and hardtack. Enter the Revenue Act of 1861, slapping a 3% tax on incomes over $800. That's right, folks. You could make $800 and not owe Uncle Sam a dime. Of course, back then, $800 was a pretty penny. This early income tax was a temporary measure, a way to keep the Union afloat. It worked for a while, even growing to a whopping 7% for the highest earners. But by 1872, the war was over, the debt was shrinking, and the income tax rode off into the sunset. Or so we thought. Fast forward to 1894, and the income tax makes a surprise comeback. This time, it was a flat 2% tax on incomes over $4,000, courtesy of the Wilson-Gorman Tariff Act. Business leaders, however, weren't exactly thrilled. They cried foul, claiming it was unconstitutional. And guess what? The Supreme Court actually agreed with them. In 1895, they struck down the income tax, ruling it violated the Constitution's requirement for direct taxes to be apportioned among states based on population. The year's 1913, Woodrow Wilson is president, the Titanic has sunk, and the income tax is back and here to stay. This time it's enshrined in the 16th Amendment, which specifically gives Congress the power to lay and collect taxes on income from whatever source derived. Take that, Supreme Court. This new income tax wasn't just about funding wars anymore. It was about funding a growing nation, with rates starting at a modest 1% and topping out at 7% for the wealthiest Americans. The income tax became a crucial tool for financing everything from infrastructure projects to social programs. It even helped pay for America's involvement in World War I. The income tax had become a permanent fixture in American life, for better or worse. Over the decades, the income tax evolved. The tax brackets expanded, rates fluctuated, and deductions came and went. World War II saw the income tax base broaden significantly, with millions of Americans filing returns for the first time. The Cold War brought about new deductions and credits designed to stimulate the economy and support families. The income tax, once a novelty, had become as American as apple pie, which, by the way, you could probably deduct as a business expense if you tried hard enough. Now you might be thinking, hold on, Scott, didn't you say that first income tax was temporary? And you'd be absolutely right. See, even that 1913 income tax, enshrined in the 16th Amendment, had a sneaky little clause in it. It was supposed to be temporary, just a way to pay for the government's expenses until they could figure out a more permanent solution. Well, guess what? They never did. Year after year, decade after decade, the income tax just kept chugging along. Wars, recessions, social programs, you name it. The income tax was there to foot the bill. It's like that friend who crashes on your couch for a weekend and ends up staying for a decade. You're not really sure how it happened, but here they are, eating your food and using up all the hot water. So, is it even legal? Well, the 16th Amendment is still part of the Constitution, and it doesn't have an expiration date. Of course, some folks argue that the original intent was for the income tax to be temporary, and that its continued existence is a gross overreach of government power. But try telling that to the IRS. Which brings us to the million-dollar question, is there a better way? Some argue that a consumption tax, like a national sales tax, would be fairer. Instead of taxing what you earn, it taxes what you spend. The idea is that it encourages saving and investment, while also capturing revenue from everyone, including those pesky ones that get their income illegally or work under the table, or the ones that just don't pay but enjoy the benefits you and I provide by working. Of course, critics argue that a consumption tax disproportionately impacts low-income earners who spend a larger percentage of their income on necessities. It's a debate that's been raging for decades with no easy answers. But one thing's for sure, the income tax, that grand old tax, is likely here to stay, at least until someone invents a way to fund the government with rainbows and unicorn tears. So until that time comes, please like, share, and follow. Also, please leave me a comment below what you think of this video. Thanks again for watching.